Imagine a world where your money works for you, not the other way around, or where investments grow steadily, weathering every market storm and bringing you closer to financial freedom with each passing day. That's not a fantasy, it's the reality for those who master the habits of highly successful investors. The truth is, successful investing isn't about luck or insider tips. It's not reserved for Wall Street elites or financial wizards. It's about discipline, consistency, and developing the right habits that lead to long-term success. In this speech, we're going to break down the 7 habits of highly successful investors, the time-tested principles that can transform anyone into a confident, informed, and thriving investor. These habits aren't complex theories or risky strategies. They're practical, proven approaches that you can start using today. Whether you're new to investing or a seasoned pro looking to refine your game, these habits will help you build wealth, minimize risk, and stay on track toward your financial goals. So if you're ready to take control of your financial future, adopt the habits of the best, and watch your investments grow, let's get started. This is the roadmap to becoming a smart, successful investor. Every successful journey begins with a destination in mind, and investing is no different. Without a clear plan, it's easy to get lost in the whirlwind of market trends and conflicting financial advice. Successful investors know exactly what they're aiming for, whether it's saving for retirement, funding their children's education, buying a dream home, or achieving complete financial freedom. They don't just think in vague terms like, I want to be rich. They set specific, measurable, and time-bound goals that guide their investment decisions. For example, instead of saying, I want to retire comfortably, a successful investor sets a goal like, I want to retire at 60 with $1.5 million in my portfolio, generating $60,000 annually in passive income. That level of clarity transforms a dream into an actionable plan. Having clear goals keeps you focused and helps you make smarter decisions. If you have a timeline and a target, you'll be less likely to panic during market downturns or get distracted by hot investment opportunities that don't align with your objectives. As motivational speaker Tony Robbins says, setting goals is the first step in turning the invisible into the visible. Patience is the secret weapon of highly successful investors. They know that building wealth takes time, often decades, and they're willing to wait for it, while others chase quick profits. Hoping to strike it rich overnight, successful investors focus on the long game. They aren't day traders trying to time the market. They're long-term thinkers who understand that compounding is one of the most powerful forces in finance. Albert Einstein once called compound interest the 8th wonder of the world. It's a simple concept. Your investments generate returns, and those returns are reinvested to generate even more returns. Over time, this creates exponential growth. For example, a $10,000 average of 8% annually grows to over $100,000 in 30 years without you adding another dime. The key to unlocking the power of compounding is time, and that's why a long-term mindset is crucial. It helps you stay calm during market volatility because you know short-term fluctuations won't matter in the grand scheme of things. Diversification is the only free lunch in investing, said Nobel Prize-winning economist Harry Markowitz. Simply put, diversification reduces risk without sacrificing returns. No one can predict which asset class, stocks, bonds, real estate, or commodities will perform best in any given year. That's why successful investors spread their money across different investments. Imagine you put all your money into a single tech stock. If it skyrockets, you're rich. But if it crashes, your wealth evaporates overnight. Diversification prevents that kind of catastrophe. It's like having multiple safety nets. If one investment underperforms, others can help balance your losses. Successful investors diversify not just across asset classes, but also within each category. For example, they invest in a mix of large cap and small cap stocks, domestic and international markets, and different sectors like technology, healthcare, and consumer goods. This strategy helps protect their portfolios from unpredictable market swings and ensures steady long-term growth. The best investors are lifelong learners. They never stop educating themselves about markets, financial strategies, and the broader economy. In a constantly changing world, staying informed is essential for making smart investment decisions. Successful investors read books on personal finance, study market trends, and seek advice from knowledgeable professionals. They don't rely on hot tips or blindly follow the crowd. Instead, they take responsibility for their financial future by becoming students of the game. For instance, they learn how to read financial statements, understand market cycles, and recognize the difference between a solid investment and a speculative gamble. This knowledge allows them to spot opportunities and avoid costly mistakes. A great example is Warren Buffett, who spends 80% of his day reading and studying markets. His success isn't just luck, it's the result of decades of continuous learning and thoughtful decision-making. Emotions are the enemy of smart investing. Fear and greed drive most market mistakes. Fear causes people to sell during downturns, and greed leads them to chase risky investments. Successful investors control their emotions and stick to their strategy, no matter what's happening in the market. When the market crashes, panic can push inexperienced investors to sell at a loss. But successful investors see market dips as opportunities. They know that buying during a downturn often leads to big rewards later. Similarly, when markets are booming, they resist the temptation to jump on overpriced trends. A prime example of emotional control is during the 2008 financial crisis. While many sold their stocks out of fear, seasoned investors held on or even bought more, knowing the market would recover. Staying calm and rational when others are panicking is one of the hardest but most valuable habits to develop. Successful investors care about fundamentals. They're not interested in the latest hot stock or get-rich-quick scheme. Instead, they focus on investments that provide real value and long-term potential. When analyzing an investment, they ask key questions. Is it profitable? Does it have strong growth potential? Is it fairly priced? This approach helps them avoid speculative bubbles and risky bets. For example, during the dot-com bubble of the late 1990s, many investors poured money into unproven internet companies. When the bubble burst, they lost everything. Meanwhile, disciplined investors stuck to businesses with solid financials and long-term prospects. Life changes, and so should your investment strategy. Successful investors make it a habit to review their portfolios regularly. They check their asset allocation, assess individual investments, and ensure their portfolio is still aligned with their goals. If a stock underperforms or a new opportunity arises, they adjust accordingly. But they don't overreact to short-term changes. They strike a balance between staying informed and staying committed to their long-term plan. Consistency is key in investing. It's not about timing the market, it's about time in the market. Successful investors make regular contributions no matter what the market is doing. They automate their savings and stick to their plan through thick and thin. Dollar cost averaging is one example of how consistency pays off. By investing the same amount at regular intervals, you reduce the impact of market volatility and build wealth steadily over time. It may not be glamorous, but it's highly effective. At the heart of every successful investor is a simple truth. It's not about chasing quick wins or trying to time the market. It's about mastering the right habits and staying consistent over the long haul. These 7 habits of highly successful investors aren't flashy or complicated, but they're powerful. They're what separate the steady wealth builders from those who get swept away by fear, greed, or bad advice. Set clear goals, think long-term, and protect yourself with smart diversification. Keep learning. Stay calm when the market swings. And never fall for hype. Review your progress regularly and commit to discipline, consistent action. These aren't just habits, they're the foundation of lasting financial success. Remember, investing isn't a sprint, it's a marathon. And the great news is, you don't have to be a genius or have insider connections to win this race. You just need focus, patience, and the willingness to stick with a proven plan. As you leave here today, take these habits to heart. Apply them to your own financial journey, and you'll be amazed at how they can transform your future. Build your wealth, protect it, and watch it grow over time. Because the best time to start investing smartly was yesterday, the second best time is today. Now go take control of your financial destiny. Your future self will thank you for it.